welcome to another episode of Invest in You. And in this episode, we are going all things crazy. It is the main thing, the new thing, the future of finance, which is cryptocurrency. Okay, in this video, I'll be describing to you how cryptocurrencies work, what cryptocurrencies I look at, and what Bitcoin is, what it does, and all those things, and also what type of wallets to have, what type of wallets is out there, and everything crypto related. And in today's episode, there's also a little post scene, Tesla credit scene, so stick around for that. We are going to be using cryptocurrencies on Mars one day and just get on train, okay? We need to get on board on how things work. Okay, so part one is, how does cryptocurrency actually work? Now, if you don't know how cryptocurrencies work, skip ahead down here. So, I don't know where the bar is, like somewhere over there. Skip forward to the section where I start talking about how to invest in South Africa, the type of currencies I'm looking at, and if you already know what cryptocurrency is and how it works, then just move along to this section. I know which side it will be, yeah. Let's go into how cryptocurrency works. Let's start off, how does a bank work, okay? Let's say person A wants to pay person B. They both have banks, and those two banks, when they want to pay each other, need to talk. They need to verify that there's enough money in in the person's account, the other account is legit and valid. They need to receive the money, move the money. There's a ton of things happening when you pay someone. And that's why banks charge bank fees monthly for very odd reasons a lot of the times. Things we don't even need. They phone you and you need this new color card because it's so much better, and you're going to be paying more for a different color card, okay? And they just get more money out of it. Don't get me started. And then also banks try and convince you that investing at 4.5% interest rate is a good idea, even though inflation's at 6.8, but don't go investing. You just need to save it up into their bank account so they can charge you bank fees on your savings account. And yes, so what cryptocurrency did is they were like, we don't like that, okay? We want to get rid of the greed factor, because banks have greed factors. They get greedy, they see people paying money for actually not really using their service, and they just get richer and richer, and we get poorer and poorer, okay? So what cryptocurrency did, and they said, let's get rid of the third man. I'm paying you, so why must I have someone else approve these accounts if we can just do it ourselves, okay? So cryptocurrency, what it does is, person A now wants to pay person B. Both person A and person B have a ledger of all cryptocurrency accounts that are paid. So hence, it's a block. So it's a part of the blockchain. Now, oversimplifying it a lot, okay, not to get ahead of myself. But so what it does is, when person A wants to pay person B, their accounts are approved right there and then. You don't need a third party person to approve and check all these other things and promise you all these flowery stuff that you need. No, you have miners, you have mining rigs, hence Bitcoin miners, that approve these transactions. So it's GPUs, systems, supposed to use GPUs, but it's automated electronic systems that approve these transactions for you. And hence there's Bitcoin miners out there, but I'm not going to go way into deep about that. But yeah, so the main point about cryptocurrency is person A paying person B. Those two are approving each other's accounts, okay? And how it works is, there's a blockchain, hence the terminology, and each block represents a different ledger. So how it works is, let's say you have 10 people in line. These 10 people are the 10 crypto or Bitcoin users. All 10 of them have a ledger of all the transactions that have taken place. And whenever someone pays someone else, all 10 people have to update their ledgers. So that's why there's a big safety factor to cryptocurrency, is because if someone wants to hack crypto, or let's say if someone wants to hack the Bitcoin network, they need to start all the way at the top, hack every single ledger, because every single ledger has to match up for a transaction to be approved, okay? So that's why a transaction will be bounced out if ledgers don't match up. And that's where hackers really hate Bitcoin, and that's why your money is so safe in cryptocurrency. It's because to hack an account, you need to hack all the ledgers of Bitcoin. So what happens is when two people pay each other, that transaction is approved, added to the blockchain, and hence the ledger is updated across the board. That's why there's so much processing power needed to update. The more people use it, the more hash rate is needed. Hash meaning processing power for Bitcoin or cryptocurrencies. But yeah, that is quite a mouthful. So to really dumbify it down is A pays B. There's no third party involved. So there's no greed factor, no one just pushing up your fees for no odd reason. And you can pay someone and you know that it's safe and it's efficient. And the big thing about cryptocurrency is it's not pegged to one currency. It's not pegged to one government's decisions. So if America decides to start a war, cryptocurrency should not fluctuate too much as the dollar would, for instance, or the South African rand just fluctuates for no reason a lot of times, but yes. So it is a lot more decentralized, democratized, and it gets rid of the greedy banks. That's pretty much the whole purpose of cryptocurrency, is to get rid of greedy banks, and that's why there's a lot of negative news being pumped out there by banks, because they don't like the fact that this system is created at getting rid of them, pretty much. Okay, so that's why you'll always read all these big banks saying no, cryptocurrency is a bubble, even though they've said that like how many times, like 24, I don't know, I've lost track. So every time this price dips, they're like, ha, there the bubble burst, and then the thing just goes, okay. Do your research. There's a lot of negative news about that out there, but just be savvy about it. So main advantages about cryptocurrency is that it's safe, it's reliable, it's anonymous, so it's very private. And that also means that's why a lot of countries can't really tax your cryptocurrencies, okay? So, but we won't get into that because I think I might get into trouble if I say anything about that. But yeah, so let's just put that on the down low. The main thing about cryptocurrency is no single entity or large corporation has a power to just decide one day that, hey, we're going to change the value, or we're going to push up the fees or something like that. It's limited. The whole point about crypto, or one of the big points about cryptocurrency, is it's limited. So it's actually an appreciating asset, because it's gonna reach a point. So there's only ever gonna, like for instance, let's say Bitcoin. So Bitcoin will only ever have 21 million coins in circulation. So that means when we reach that point when all 21 million is in the system, the demand is going to skyrocket, because you can't now just mine it from anywhere. You need to actually trade it. So that's why the price goes up. And it's not like a country that can just keep on printing money, hence why inflation exists. And inflation is just horrible, especially in South Africa. It's just bad. So it's not really, it's decoupled from inflation, because your cryptocurrency, no government entity no one can change the system and just decide we're going to push out more cryptocurrency or more Bitcoin so that everyone can be more happier, so the demand rises, and that's why the price is going. What coins I look at and why I think it is definitely something that is staying for the future. So as we know, a lot of people are calling it a bubble, they're calling it fake and stuff. They said the exact same thing about gold and about fiat currency way back when. When paper money started coming out, everyone was like, no, it's a piece of paper, it doesn't have value, you can't peg it to anything. And then they pegged it to gold, and then they removed the gold. So you do know paper currency is not matched to gold anymore as it was in the old days. And now they're saying the same thing about crypto, okay? So people are restrictive to change, and it's normally the ones that will lose out because they are stuck in their ways and they don't want to change, okay? So, but cryptocurrency is here to change, and probably the king of all cryptocurrencies is Bitcoin. So a lot of people are saying no, every time the price dips, there's a correction or whatever, they say there the bubble goes and people freak out, they sell and they lose money, and then the thing just goes up again. Okay, it's because that's just how Bitcoin works, okay? So get used to it. If you're gonna invest into it, ride the dips, buy more if you want, and then just go to the moon, okay? So, but the big thing is blockchain technology is everywhere. They're using it in smart cities now. They're using it in company profiles. They're using it literally everywhere. They're using it in security systems, because blockchain technology is amazing. And hence why a lot of the times they try and split the two and say blockchain technology is good, but Bitcoin is not. No, it is the same principle. And the reason for, especially the recent sudden rise in Bitcoin's price, is because a lot of large companies have started using it. Look at Tesla, who moved like 8% of their cash balance over to Bitcoin. Companies like Square, companies like MicroStrategy, and a lot of these big companies are starting to move their cash balance over because it is a good investment for them. And that's why also what's happening is a lot of hedge funds are stopping to peg against gold, and they're moving over to digital gold, which is cryptocurrency, Bitcoin. And that's why the price is skyrocketing, because it's becoming more and more adopted. The more adopted it gets, the more the demand is, and the higher the price goes. So that is why there's such a sudden rise. And also, companies like Tesla now considering allowing you to buy Teslas with cryptocurrency. PayPal allowing transactions of Bitcoins and cryptocurrencies, like Shopify. Visa's working with Coinbase to allow transactions like that. Coca-Cola even has vending machines that allow you to buy Coke with cryptocurrency. Alrighty guys, so I got way too excited making these videos, and there was just a ton to tell you, and I didn't want to make it too long, the videos, and just overcomplicated. So I've split it in two, okay? So this is part one. Go watch part two, please, which will have the Tesla bit also at the end, okay? But thank you very much for sticking with me. It's just, this is such a big part of investing that I just couldn't contain myself, okay? So go watch part two over here. I don't know where the thing will be, somewhere on the screen where it's not on my face, but yeah, go click there and you can see it.